What's up, everybody? It's Calais Poteet, and today we are going over 10 stock tips for trading stocks, particularly trading penny stocks. So these are 10 secrets that you necessarily want to know when it comes to trading penny stocks. All right, or any stocks in that matter. But for one, this can definitely apply to penny stocks, and I will tell you why. So first and foremost, I want to make sure that you stay all the way to the end of this video, because at the end I definitely have a bonus and something special for everybody that stays to the end. So stay with me, pay attention. If you got a notepad, a pencil, a pen, definitely take that out. You want to take down some notes. All right, so number one, when it comes to trading penny stocks or trading stocks altogether, you want to set your entry and your exit rules. All right, discipline is paramount when it comes to trading penny stocks. These names move a lot faster than your typical New York Stock Exchange, and large cap stocks like Nvidia, Apple, Alibaba. There's a lot of news every week. There are things you can see coming down the road, be they announcements, earnings reports, or analyst calls. With more information, there are slower moves. Nvidia isn't going to move 70% in a single day. It has the law of big numbers working against it. And slower moves, less emotions for traders. So, on the flip side, when you take virtually unknown penny stocks, there's a lot less info you won't see in earnings reports or any analyst call blasted on CNBC headlines about one of these OTC names. And with less information, there are faster moves. Penny stocks have the law of small numbers working against them. And with that comes more emotion. Emotions and investing are inseparable, especially when you're trading penny stocks and watching your money rise and fall at a much faster pace. If you want to maximize your profit potential, then you have to train yourself to manage them together. The heat of the moment can lead to mistakes if you don't have a predetermined plan. That's why it's incredibly important to set entry and exit prices before a trade is open and stick to it. So how? Well, to start, we'll use stop limit orders to enter penny hawk trades. That means we won't buy a stock until it reaches a guaranteed specified price, and we'll never pay too much. We'll set tight trailing stops as a way to minimize losses and guarantee gains. And we'll do it all to ensure we keep emotion out of it and money in it. All right, think about it. Your investment is climbing up higher and higher. You told yourself you get out at 100%. But you want more, and you abandon your exit strategy right before the stock tanks, putting you right back where you started. So that's why exactly what we're trying to avoid. 500%, 700%, 1,000%. They're attainable profits with penny stocks, but you can't go into a trade trying to make 1,000%. That's like putting 500 down on green in a game of roulette, and we aren't risking our money like that. We're targeting specific, consistent gains, and we're doing it with specific entry and exit rules. All right, that's number one. Number two, never trade alone. When it comes to trading regular stock market, you should always avoid bandwagon stocks. You know, those names that everyone jumps on just because they have the fear of missing out. All right, take GameStop, AMC, Dogecoin. You know, by the time they hit the mainstream media, it's usually time to exit, not enter. But the game is a little bit different in the penny stock market. There are less people trading penny stocks than trading, say, Apple. So when trading the OTC, you need the market to do the heavy lifting for you. You're not going to move a stock by yourself. That's why I monitor trades and trends in volume. When the crowd starts to lift the stock, that's when it's time to jump in. I look at a stock's average 10-day volume to search for names about to pop. When that 10-day average starts to pick up, that tells me something is coming. All right? When volume starts to pick up, that's when we get in. But make sure you're not the last to leave the party. You don't want to be the one left cleaning up the mess at lower prices. You can tell just how quickly a stock drops back down the moment volume starts to dip. All right, that's number 2. So, number 3 is volatility is your best friend. I'll say that one more time. Volatility is your best friend. So to make money on low dollar stocks, you need them to move. That means you need volatility. And penny stocks are some of the most volatile names out there, but it doesn't help to get in on a stock while it's jumping around. All right? So you want to watch for the calm before the storm and take advantage of it. Rising volume levels tend to indicate volatility waves ahead, and those waves drive prices higher and fast. All right, how do you find the calm before the storm? With something called Bollinger Band, which you can see. I like to call the volatility band. That's volatility. When the band is moving up, volatility is high. If, however, the band is low, that's when I'm paying attention. If the volatility band is low, but volume is rising, that's the calm before the storm. Rising volume, low volatility, the time to get in. Listen to what stocks are telling you. That's how you take advantage of volatility to ride. You take advantage of that volatility in order for you to profit. All right? You need to be ahead of the wave of investing. So that's number 3. Volatility is your best friend. All right, Bollinger Bands. Round numbers always matter. This is number 4. Round numbers always matter. Just like their high price counterparts, micro cap and penny stocks trade with heavy support and resistance at round numbers. Why? It's all psychological. Traders always target buying and selling opportunities using round numbers because they're easy to measure with our minds. Most people say, I'll buy XYZ stock when it gets to $2. I'll sell it at 4. They don't say, I'll cash in at 2.13 and cash out at 5.34. So usually when a stock hits a round number, it's a sort of milestone. And you'll see a lot of movement either in or out of market support or resistance. But things are a little bit different with penny stocks. They don't hit $5, $10, or $20. The lower the price, the smaller the increments, meaning when you're dealing with penny stocks, we're looking at increments of nickels. All right, when a stock is bouncing between 0 and 30 cents, round numbers are 0.5, 0.10, 0.15. All you have to do is move the decimal point. All right. Number 5, technicals matter. All right, there's been a lot of talk and speculation about what the market has been doing lately. Are technicals really mattering? But they definitely do matter. So it's best to always take a look at your technicals. The 50-day moving average, the 20-day moving average, the relative strength index, the RSI. These aren't just fancy terms I toss around for no reason. Just like volume and volatility, these are important indicators when you're looking at penny stocks. Before we buy a stock, we want to make sure that it's heading up. That means the 50-day and the 20-day moving averages have to be trending up as well. If not, you'd be heading into dangerous territory. Okay? If volume is rising and volatility is dropping, our indicator to get in during the calm before the storm, we just talked about it, but the 50-day is dropping, then that's it. We're out. All right, so pay attention to your 20-day, your 50-day moving average, your volume, your volatility. All these play a big part in having a profitable trade. You don't want to jump in if you haven't done your technicals beforehand. You haven't developed your trading plan. You don't know your entry point. You don't know your exit point. When's a good time to get in? Not sure because I haven't looked at my 50-day. I haven't looked at my 20-day. I haven't looked at my RSI. I haven't looked at all these trends. You want to know which direction a stock is trending in. Is it trending up? Is it trending down? We have to know this. Technicals matter. All right. Number 6, overbought can always become more overbought. All right, this commandment works in favor of penny stock traders almost every time. Low dollar names have a natural tendency to run. As the crowd becomes aware of a breakout, triggering a buying frenzy, that almost immediately results in parabolic moves higher. And when a penny stock is on the run, it moves in much larger magnitudes than a larger cap name. Think about it. A $50 stock can get to $5 much more easily than a $50 stock can make the same 900 jump to 500. All right. For this reason, low dollar and penny stocks have a natural tendency to shoot into technical overbought territory, which would typically have traders closing positions immediately, taking the stock. So, per commandment number 1, follow your pre-trade plan so you don't get stuck waiting for the stock to get higher only to sell it and see it get pumped. All right. Number 7, fundamentally sound is better than fundamentally proven. What does that mean? Well, when I'm trading the regular stock market, I remind myself that stocks are driven higher by speculation, not fundamentals. And that lends itself well to penny stocks too. See, I call the OTC market the public IPO exchange. There are so many opportunities to get into companies on the ground level as they bring both exciting and often new businesses to the public. Unlike the IPO market, where early investments are limited to those in the know investors, the OTC market is open to anyone looking for insider style opportunities. But these companies are typically in the early stages, meaning there aren't many fundamentals to be proven. Something like the crypto space right now. Everything's in an early stage. There's not much fundamentals about the markets, not too much historical data, not too many patterns. It's still early for a lot of these companies. So instead, you're investing in an idea. And oftentimes, fundamentally sound ideas turn to gold. So here's an example. Amazon. Before the e-commerce giant was the booming success it is today, it was just a company with an idea selling books online. The idea was sound, but it wasn't proven yet. So early investors in Amazon were investing in an idea. There weren't positive earnings or profitable numbers to count on. And that's what it's like when you're buying penny stocks too. Take MindMed Inc. Before it was listed on the NASDAQ, this was just a penny OTC stock. It's not profitable, it's not FDA approved, and it's not fundamentally proven. But in the past year, its shares have grown 1,158%. Forget what you know about fundamentals. These companies haven't proven themselves yet, but that's exactly what makes them so profitable for traders like us. All right? So, that's commandment number 7. Fundamentals. All right, number 8. Short sellers are the enemy. Why do you say that? Well, usually short sellers are a trader's friend. All right? They can end up squeezing stocks infinitely higher. So, like in the case of GameStop, let's take GameStop and AMC via a short squeeze. All right? So, what's a short squeeze? A short squeeze is when the shorts believe the price of the stock is going down. They're selling shares, they're borrowing and selling them, they're buying puts, the stock is going down. All of a sudden buyers come in, they have to cover their positions. More buying occurs. All you know is starting to run up, shorts are covering. They have to buy back their positions, they have to cover their positions. All right, but they can do real damage to stocks that are lightly traded over the long run. So remember, less info on a stock means more emotion goes into trades. And with less information available on the company, a short seller can end up sinking the stock 50% just by betting that it will. Oh my God. Wow. So watch the shorts. If they start coming in, then our guard goes up, our trades are tightened, we protect our cash. You have to protect the cash. Have to. All right. Number 9. Listen to the noise. That's interesting. But you know what? This feels counterintuitive. I know usually traders tell you block out the noise, focus on the trade at play. But I'm telling you to always look for the noise in the trend. Oftentimes, noise is simply a sudden increase in volume, and that signals a new buying trend is emerging in the stock. These trends lead to the buying frenzies that result in huge profits. Listen to that noise. It will identify large parabolic rallies. All right? And penny stocks are noisier, meaning the profit potential is greater. The volatility is much more than that of large cap stocks like Apple or Amazon. So we're looking at large cap stocks, Apple, Amazon. We're looking at small, micro-sized cap stocks, things that have no fundamentals, no earnings, nothing there yet. Haven't proven themselves. Small in nature, right? All right, so when it's quiet and you know the stock gets jumpy, making erratic moves, listen to that noise. It'll lead you straight to the cash. And these apply, let's say penny stocks. These are stocks that are less than $1 up to $5. These a lot of cryptos move in the same way because a lot of them are cheap. A lot of them are under $5. So they move the same way. They don't have fundamentals. They're mostly ideas. All right, we're investing in those ideas. Same with penny stocks. See the correlation? All right. Last but not least, never overstay your welcome. Just don't. Don't overstay your welcome. All right. Remember what I said. Things move quickly in low dollar markets. It's one of the reasons that these stocks are so profitable. But it's also a reason to be careful. All right. Pigs get slaughtered. When you're trading low dollar stocks, you can't be greedy. You have to stay alert, nimble, and reactive. But that's exactly what I'm here for. I'll do the analyst, you do the trade. And the moment it's time to leave a penny stock, the pocket, the cash, you'll know. So, thank you for sticking around to the end of this. If you enjoyed hearing this information, I definitely have a bonus for you, a discount. I want to be able to offer you 40% off of Private Profits Trading Academy. So what is Private Profits Trading Academy? It is a community-based educational platform for trading, mostly day trading. We're going to usher in more of investment strategies, dividend strategies, wealth building strategies, all just a mountain full of financial education, insurance. But mostly right now what we're doing is teaching people how to day trade stocks, penny stocks, crypto, stock options. That's what this academy is about right now. If you have any interest in learning how to day trade stocks or crypto, and particularly using stock options, this is definitely for you. We have custom codes that were engineered. As you can see, we use the VWAP indicator. This is an indicator, one line on the chart. It's the only line you need, blue line to the orange line. It's a custom code, Ichimoku custom cloud code, an ATR code, average true range. We can see how much a price is subject to move on any given day. I'm telling you, just the custom codes alone will help you identify your profits and your exits. We have already custom coded how to identify when to get into a trade and when to get out of a trade. All you have to do is follow along. We also send research signals, trades to your email, or we will be posting them in the group, daily watch list, which stocks we are watching and why. It's a full master class that will take you from zero to full-time trader in no time. All you have to do is execute, apply the information. We're going to work on your mind state, because trading is definitely a psychological thing. A lot of emotion comes into it because you have money on the line. Nobody wants to lose money. Well, it's like gambling. It's not like gambling, because you have strategies, you have trading plans, you know what you're doing before you get into a trade. You got your stop orders in. That means if a stock goes over or under the price that you predicted, it stops you out the trade, lessening your losses. We want to lose quick and gain even quicker. So, thank you for sticking around. I offer you 40% off of Private Profits Trading. Please take full advantage. If you have any questions, please send any questions to support@privateprofitstrading.com. We will answer any and all questions. If you want to book a call, schedule a call, you can get on Zoom. We can do anything to help you further your education as far as trading, stock options. We'll be getting into calls and puts. So many different things coming. Definitely want you guys to be a part of this community. And thank you again. Stay tuned.